Hi everybody, Geoff Hyland here with the Hyland Group eXp Realty. It is August. Want to give you your market update through the end of July 2023. So we've got a lot of numbers to cover this year. We've got some craziness going on in the market, and I just want to try and make some sense of that. So first of all, the seller strike, as it's being called, is still kind of continuing, not only locally, but on a national level. What do I mean by the seller strike? Well, basically what's happening, as we've talked about before, is that a large percentage of homeowners in the United States have an interest rate on their current household lower than the current rates. So as you know, over the last few months, the interest rates continue to creep up. So if we take a look back March of this year, interest rates were about 6.5%. They stayed there until about May, then when they inched up to about 6.6%, and they've been evolving. Now we're at basically a 23-year high, over 7% here in August. Inventory locally has continued to go up. If you take a look at our spring selling season, which is when our inventory usually starts to grow, we've had a 50% increase from March 1 to August 1. Now that is site-built single-family homes available in the Prescott MLS. So the inventory continues to go up a little bit. Now, conversely, values actually showed in a lot of areas in our MLS a little bit of an uptick, and we're going to talk about why, because it's a little counterintuitive. So in Prescott last month, in July, we saw a 9% increase in overall values. Like I said, that seems counterintuitive. So I dug into the numbers a little bit more. Of the 226 properties that closed last month, about 100 of them were in Prescott proper. So we'll just take Prescott for an example. When I looked at the 100 properties that sold last month, 17 of them, 17%, closed at or above that $1 million mark. So the luxury properties that were sold did have an impact pulling those values up. A lot of new construction in areas like Prescott Lakes, Talking Rock continue to happen. If you take out the $1 million plus market and you look at the balance of the homes sold in Prescott, it still shows about a 5% increase in overall value. So I started scratching my head going, why is that? Well, I believe that the answer is twofold. Number one, interest rates were going up, okay, and the Fed had indicated that they were going to raise rates. If you look at when homes close in July, that means they went under contract in May and June. And if you look at the rates today compared to May and June, in a lot of cases they were a full 0.5%, if not more, higher today than they were then. Simultaneously, the Fed came out and said, hey, we're going to continue raising rates. So what I think happened is we're seeing in July on the numbers of closings that there was a little bit of a pent-up demand. Buyers saw an opportunity at 6.5% and made offers before the interest rates continued to climb. Now, we're seeing conversely right now in this newer interest rate environment that the active inventory, again, I'm going to pick on Prescott, the active inventory in Prescott's been on the market now for 109 days. That's a little bit different than the number of days on market that homes are selling in. So again, there's lots of factors that go into selling a home. Your price, your condition, your location, your marketing are a few. If you are doing a good job with the marketing, you've priced the home correctly, you have a good location, the condition is good, the homes are taking about 40 days MLS wide to sell. So there's a disparity there. You know, why are some homes selling while others remain on the market? Usually you can look at one of those four factors and you'll get the answer. Now, other values, Prescott Valley actually went down almost just a little bit less than 1%. Chino Valley had a little bit of an uptick. Again, some higher priced properties on large acreages sold out there. Overall, MLS, taking everything into account, went up 4%. What do I think is going to happen? Well, in the new interest rate environment that we're seeing today, I do think that we're going to see a little bit of a correction once those settle in, because what we're seeing again is the active inventory on the market for a much longer period of time. Now, this seller strike that everybody's talking about, to give us some perspective, locally we have about a 3.5 month supply. I've said this before, I'll say it again. Usually a normal market is anywhere from 5 to 7 months. On a national level, when you look at the number of homes for sale today and compare it to pre-pandemic levels, so July numbers nationwide compared to July of 2019, the overall inventory in the US is down 48%. So still very limited inventory relatively speaking. What I think the market is recognizing is that some sellers out there are being realistic and some are just pushing the envelope hoping that they're still at a value that is probably not there based on the new rates. Overall demand in the marketplace, if you compare July 2023 to July 2022, About 93% of the overall buying activity is still in the market. So despite what you read, there's still plenty of buyers in the market. And if you are a buyer, you might be asking yourself, well, what am I supposed to do? Well, a couple things to look at. Don't underestimate the tax credits, number one, if you're not a homeowner right now. Number two, a lot of experts are predicting that interest rates are going to come down. So there's sellers in the marketplace right now that want to sell. They've been on the market 109 days. They want to sell their property. Consider locking in the price now before the interest rates go down, which typically raises prices back up, and then refinance your home as soon as the rates come down. If you have any other questions, feel free to contact us at any time. PrescottAreaProperty.com. Thanks for tuning in.